Welcome to the Deep Dive, your express route to being truly well-informed. Today, we're cutting through the noise to bring you the essential nuggets from Trip.com Group's second quarter 2025 earnings. And what's caught the market's eye here isn't just the strong numbers, but, well, some really interesting strategic plays in tech and demographics.
Exactly. Yeah, we're looking at a global travel giant that's not just reacting to the evolving travel landscape, but actively trying to shape it. They've made some pretty significant bets that seem to be paying off already, and we'll unpack what those mean, for the future of travel.
All right, let's dive straight into the numbers then, because Trip.com Group, they really delivered a robust Q2. We're talking net revenue hitting an impressive $2.07 billion. That's a solid 16% increase year over year, and, a healthy 7% bump just from the previous quarter.
And what's particularly compelling, I think, is that they didn't just meet expectations, they comfortably surpassed them. Their non-GAAP diluted EPS, that's their earnings per share, kind of excluding certain one-off items, gives you a clearer picture of core profitability that came in at $1.01 per ADS. That's the American Depositary Share, how they trade in the U.S. And that figure beat consensus estimates by over 3%. And this strong top-line growth, it really flowed through to their profitability, too. Adjusted EBITDA, which is, a key measure of operational cash flow, hit about $680 million. That represents a pretty healthy 33% margin. It tells you they're not just growing, they're growing efficiently.
And efficiency is certainly supported by their financial muscle. I mean, they're sitting on a substantial war chest, too, right? Something like $13.1 billion in cash and investments as of June 30th. This isn't just padding. It's like a launch pad for these strategic moves. So with that kind of strength, what are the key engines driving this performance beyond the headlines?
Well, management pointed to strong momentum across all segments, which is, good to hear. But if we dig a bit deeper, the real story is where that momentum is coming from. And importantly, how Trip.com is strategically sort of fanning those flames. One area truly stands out: inbound travel to China. We're talking over 100% year-over-year growth in Q2 bookings.
Wow, over 100%.
Yeah, especially from places like Korea and Southeast Asia. This isn't just a little bump. It feels more like a reawakening for that market segment.
That inbound growth is phenomenal, especially considering where China's travel market, has been.
Yeah.
But why is this particular growth, the inbound part, such a big deal beyond just the flashy percentage? Is it like a fundamental shift?
Oh, it's absolutely fundamental. And it's really about this massive untapped potential. If you connect it to the bigger picture, inbound travel right now accounts for less than 0.5% of China's GDP. Compare that to developed market averages, it's significantly higher elsewhere. So the potential for growth there is just enormous. And Trip.com Group is actively positioning itself to capture it. They're not just, waiting for tourists. They're rolling out the red carpet.
Okay, rolling out the red carpet. How are they doing that specifically? What kind of initiatives are in play to grab that potential growth?
It's a multi-pronged approach, really. For instance, they've opened China's first dedicated inbound travel service center. It's at Beijing Capital Terminal 3, a huge international gateway. Imagine getting off a long flight and bam, there's multilingual assistance, integrated services right there at the airport. It's a big step, making China feel more accessible.
That makes a difference, yeah.
Definitely. And beyond that, they've launched this IntelliTrip initiative. It's not just a catchy name. It provides AI-powered tools, think multilingual systems, high China tags for hotels. These tags help international visitors quickly find hotels that cater to them, maybe English-speaking staff, international payment options, specific amenities, that kind of thing. Their target is pretty ambitious. Partner with 200,000 hotels and achieve 100% growth in inbound bookings in just 3 years.
Wow, that's a clear statement of intent. Really smoothing out those pain points for international visitors. I remember trying to book high-speed rail in China years ago. It was an adventure. Sounds like they're making that easier now. Simplified rail and attraction bookings right in the app. Plus, you mentioned the tailwinds from easing visa policies. That must help too.
Absolutely. That ease of access combined with this targeted tech-driven approach, it's a powerful combination. And it's not just about inbound. International bookings outside mainland China also surged over 60% year over year, mostly driven by the broader APAC region, but seeing new momentum in the Middle East too shows their global diversification is gaining traction. And of course, outbound travel from China, the pre-pandemic powerhouse saw hotel and air bookings surpass 120% of 2019 volumes.
Oh.
Yeah, that recovery is stronger than I think many anticipated.
That's a fascinating rebalancing act, like a pendulum swinging back while these new growth areas pop up. You mentioned AI earlier with IntelliTrip. How central would you say AI really is to their overall strategy? It feels like a really important thread running through all this.
Oh, it's not just a threat. I'd say it's rapidly becoming the backbone of their operation. They've recently upgraded Trip.Planner. It's an AI-assisted itinerary tool. Works a lot like, the popular AI chatbots, using powerful large language models and, crucially, millions of their own proprietary data points. It doesn't just suggest a place. It generates personalized plans, integrating everything, real-time transport, dining, attractions. You could tell it, like, I want a family trip to Beijing, focus on history, kid-friendly stuff, and boom, it generates a detailed, customizable itinerary.
That sounds incredibly useful. Cuts through hours of research, right?
Mm-hmm.
But what makes Trip.com uniquely positioned for this kind of AI compared to, say, other tech companies or smaller travel startups?
That's a key question. The company believes OTAs, online travel agencies like them, are uniquely positioned because of their sheer volume of proprietary data. They have millions of real bookings, traveler preferences, pricing histories, supplier relationships. It's a goldmine for training AI. And it's not just consumer-facing tools. Their IntelliTrip suite for hotels. It also includes an AI business advisor and an AI content generator.
Okay, so for the hotels themselves.
Exactly. So a hotel partner can get AI-driven insights, pricing strategy, market trends, maybe even generate engaging descriptions for rooms and amenities tailored for specific international guests. It aims to boost efficiency and differentiation for their partners. Creates a depper ecosystem.
Interesting. So it's a full circle AI play, customer experience and empower partners. Okay, beyond tech, let's pivot to demographics. It seems like they're making a real effort not to leave any segment behind. Seniors, younger travelers. What's the strategy behind these sort of diverse demographic plays?
This is a really insightful area, I think. They're clearly recognizing that different travelers have vastly different needs. Take the old Friends Club. For senior travelers, they defined it as 50, 55 plus in China. This segment saw users and GMV gross merchandise volume, basically total sales value, grow over 100% just since the end of 2024.
Wow, just since year end.
Yeah. And this isn't a niche. Some are calling it a silver tsunami. This market is projected to exceed $1 trillion in the next 3 to 5 years. So Trip.com isn't just offering standard tours. They're tailoring small group tours, focusing on comfort, pace, shared interests. They're even opening offline stores for this segment.
Offline stores. Interesting.
Yeah, recognizing many seniors appreciate that face-to-face interaction, personalized service, especially for complex travel plans.
$1 trillion market for senior travelers. That really challenges some old stereotypes, doesn't it? Shows how crucial understanding evolving demographics is. But what about the other end, the younger generation?
Right. Well, simultaneously, their travel plus entertainment segment, catering to younger travelers, also saw revenue grow over 100% year over year. This capitalizes on the massive popularity of concerts, festivals, live events by bundling tickets with travel. Young people are looking for experiences, right? Trip.com is making it super easy to combine that must-see concert with a weekend trip. It's about understanding that travel for them is often an extension of their lifestyle, their passion.
That's smart, capturing both ends of the demographic spectrum. Now, on pricing, you mentioned domestic hotel, and air prices faced some pressure, but volume stayed robust. Outbound airfare softened a bit. How's management navigating these different pricing dynamics?
It's definitely a delicate balance. In the domestic market, despite some pricing pressure, Trip.com's focus seems clearly on driving volume, maintaining market share. They're likely leveraging their tech efficiencies to offer competitive options without getting dragged into, a race to the bottom on price. For outbound, as flight capacity comes back online, naturally, airfares can soften, which is great for travelers. But for Trip.com, the key is that those strong volumes are still flowing through their platform. That suggests their value proposition, ease of booking, comprehensive options, those AI tools, is resonating even as more options become available. Their strategy feels less about setting prices and more about facilitating the transaction and adding value around it.
Okay, so navigating pricing pressures with volume and tech efficiency. That leads us nicely to another crucial area for investors. How they're using their cash. Let's talk capital allocation. That sends a big signal.
It really does. So Trip.com Group finished about $400 million in share repurchases under the previous plan, used up that whole authorization. But what's even more significant is the new $5 billion share repurchase program approved in August. That's a massive commitment.
$5 billion. Okay, so what does this new multi-year program tell us?
Well, it tells us a few things. First, this program is funded by proceeds from a recent deal, likely their reduced stake in Make My Trip, plus their already strong cash pile. Second, it aims to mitigate dilution from stock-based compensation, maybe even reduce overall share counts, which boosts earnings per share for existing holders. But really, beyond the mechanics, it's just a strong vote of confidence from management in their long-term value, their future cash flow, signals they think their shares are a good buy.
That's a powerful message. But in such a competitive market, how are they differentiating? Are they still just battling on price, or is there a broader strategy?
Yeah, that's where their competitive strategy, what they call the G2 strategy, comes in. It's focused on great services and globalization, explicitly not pure price competition. And the insight here, I think, is that they're trying not just to compete on price, that race to the bottom can be brutal in travel. This G2 strategy signals a pivot towards building loyalty, maybe a higher margin business through value adds. That can be a much stronger moat. They emphasize comprehensive offerings, mobile first, 70% of bookings are mobile now, and global customer support, like their 24/7 SOS service.
So convenience, trust, seamless global experience, not just the cheapest ticket.
Precisely. And they also acknowledge, that the APAC market is huge and fragmented. It's likely big enough for multiple players to grow, even with aggressive marketing from global peers. Their approach seems less about domination through brute force, more about winning through superior service and leveraging their unique data and tech.
That's a refreshing perspective. Okay, looking ahead, management sounds pretty optimistic, bullish even, about long-term travel prospects. What are some key medium-term targets? And what risks are they watching?
Oh, yeah, they're clearly bullish. They highlighted medium-term targets like accelerating that inbound hotel growth, riding the silver tsunami we talked about. They do acknowledge near-term risks, things like macro sensitivity, basically, how broader economic stuff like inflation or slowdowns could hit travel spending, and competitive ad spend is always a factor. But they seem to believe these are offset by the strong inbound tailwinds and those AI-driven user experience improvements. The focus is clearly on innovation, expanding their market. And they're also putting a strong emphasis on sustainability, now a $100 million tourism innovation fund, promoting eco-conscious travel choices. That aligns with where consumer values are heading.
All right, this is a segment where we put on our most audacious analyst hats. Given Trip.com's strong beat, that massive buyback, the clear pivots to AI and inbound, the market's feeling pretty bullish.
Absolutely. So my audacious but plausible thought, building on this deep dive, maybe involves looking really closely at TCM's strategic positioning, especially with that silver tsunami, the Chinese senior travelers. This isn't just a recovery play anymore. It feels like a bet on some powerful demographic and tech shifts that maybe, just maybe, the broader market is underestimating.
The silver tsunami again. I like it.
Yeah. The Old Friends Club isn't just some side project. Management projects it as a $1 trillion plus market in 3 to 5 years. Combine that focus with their AI personalization through Trip.Planner and the targeted IntelliTrip for hotels, you have this hyper-focused strategy. They're going after an underserved, high-value group. This could generate sustained, maybe outsized volume growth, potentially beyond what standard analyst models capture. It could create a really durable moat against competitors just focused on price.
So how would you frame that as an idea?
Well, thinking audaciously, maybe consider the long-term potential here. It suggests a thesis focusing on how these less obvious yet potentially massive demographic and AI catalysts could unfold over, say, the next few years as the market fully appreciates them. Maybe something looking further out than just the next quarter or two.
A silver tsunami and AI creating an enduring moat. That's certainly a provocative thought to mull over. So, to recap, Trip.com Group had a stellar Q2, driven by surging inbound travel, significant AI innovation like Trip.Planner and IntelliTrip, and a huge commitment to shareholders via that new $5 billion buyback. They're effectively using tech to capture new and expanding demographic segments, positioning themselves for, sustainable growth in a really dynamic global travel market.
It really does highlight how focused strategic investments, especially in AI, and genuinely understanding evolving traveler needs can create significant long-term value. The implications for how tech will keep shaping travel, especially for different kinds of travelers around the world, it's genuinely exciting to watch.
Indeed. So what stands out to YU from Trip.com's latest results? We invite you to consider how these strategic moves might redefine the future of online travel. And maybe, just maybe, how you plan your next trip. Thank you for joining us for this deep dive into Trip.com Group's Q2 2025 earnings.